Okay. Hey, everybody. Dan Fitzpatrick here at stockmarketmentor.com and optionmarketmentor.com too, by the way. Anyway, so I want to look at Google today. We've been at Stock Market Mentor, we've been in this stock for a while, and it should be obvious where and why here. And let's talk about the whole AI thing for a minute. And we got to start with the weekly chart. Google had been one of those stocks, one of the mega cap stocks that, hadn't really been doing very well, not like, Microsoft and NVIDIA, even Apple, but the stock really turned around. And that kind of made sense when you consider that there's, a big theme towards just like, hey, man, screw it. I don't know what the Fed's doing. I don't know what's going on. But I'll tell you this, the mega cap stocks, they don't need the money. So let's just go there. We don't know where all the bodies are buried, but we know they're not buried at Tesla and Amazon and Apple and Google and NVIDIA. We know that stuff's solid. And so Google, though, had actually kind of been lagging behind some of the others. But then turns out all of a sudden, people realized that these guys had a real AI play. And by the way, just a few comments on that. You could say, well, Google's was late to the party on this. Okay, well, you could say Bill Gates was late to the internet on that because, they didn't do anything back then. This is a little bit different. The issue here is Google had, or I should say Alphabet, but Google has a pretty established brand. They've been around for a long time. And so if they came out with an AI product and it didn't work very well, it was a quote failure, that would have definitely hurt their brand, their whole brand, because they're search, right? And so they had to do some brand protection. And the way they did that is to step back, work on their stuff, not really say too much, knowing that they're going to get some, they're going to be given away the first to market position to somebody else who doesn't have as much to lose. And I would say that's really what happened. Okay, so, but now Google's in the mix and people are realizing that this gives them a real big advantage over their competitors. And that's one of the reasons why the stock ran up, right? Okay, there are like 98 bazillion people that know more about this than I do, but I just told you what I know. But I do know charts, and I know this stock, let me get these Bollinger Bands to a more reasonable level so you can see what I'm looking at here. 2 standard deviations, not 3. So this stock was really consolidating in narrowing highs and lows. And then it, broke out here, at least on my chart, it did. But then it pulled back. It didn't, I thought, oh crap, this is a false breakout. And so I actually got shaken out and had to buy it the next day at a higher price when I saw the stock was continuing to run. So I initially had what I would say is a really good entry, but I just got shaken out. Because I don't believe there's such a thing as a wussy in trading. I think you're just a risk manager, and I didn't like what I saw, so I got out. I'm not perfect. I'm not the world's best trader, but I don't lose money. And so now we're back in. The stock's continuing to run, but on a very short-term basis, as a short-term trading basis, you got to look at these Bollinger Bands because they will really tell you more than you might otherwise realize. When you see, you see the band where the price is going, you see it just continuing to expand. And this also continues to expand because the bands have to be, they're 2 standard deviations away from the 20-day moving average here. And at any given time, the bands have to be equidistant from this 20-day moving average. If this is, 15% above this, this is going to be 15% below. And the reason they widen so much is because the move happens so fast that this 50-day moving average, instead of doing this, is instead doing this. So it's running right along with the upper Bollinger Band. So after a certain amount of time, what happens? After a certain amount of time, what happens is the opposite band starts to hook up and starts to make a run. And it just so happens that when that happens, it's a real good indication that the run is at least pausing, because that's really what causes the bands to start, pulling in a bit. So what I'm saying is, on a real short-term chart, this has been one heck of a trade. On a short-term basis, I think you got to take profits, but then you zoom out and you look at this. And to me, it's only a matter of time before this comes up to this last high in 2021. I don't see how this cannot do that. However, I do think that it won't do this. I think it's going to chop around a lot, but then finally we're going to get up there. So you need to make a decision in your own trading. Are you trading on a short-term basis where you're swing trading? And if you are, then now's the time to be booking some profits and probably all of your position as a swing trader. But if you're more of an investor, I sure wouldn't be buying more here, but you got to understand that you're going to get some wiggles and jiggles, and therefore you just have to accept it or become a short-term trader and ditch it all. Okay, so anyway, that's what I think. Hope you're having a good week and you have an awesome weekend, and I'll see you guys all back on Monday.